Understanding rate of change, ROC, in finance and beyond. The rate of change, ROC, is a fundamental concept that plays a significant role across various fields, particularly in finance, mathematics, and science. Effectively, it represents the speed at which a variable changes over a specific period of time, providing insight into the momentum and dynamics of that change. What is rate of change, ROC? ROC is mathematically defined as the ratio of the change in one variable relative to the corresponding change in another variable over a specified time interval. Graphically, ROC can be represented as the slope of a line on a coordinate graph, which visually illustrates how one variable behaves in relation to another. The Greek letter delta, is often used to denote change in this context. For example, delta y represents a change in the value of y, while delta x denotes a change in x. Key takeaways. The ROC signifies how quickly something changes, rather than the size of those changes. It is a critical tool in finance for analyzing market trends and identifying price momentum. Indicators like the price rate of change help traders quantify changes in asset prices over time. Understanding the rate of change, ROC. ROC assesses the percentage change in value over a defined period, encompassing various applications from physics to financial markets. For instance, in the context of finance, ROC is utilized to observe how asset prices fluctuate, helping investors recognize momentum and potential market trends. In the investment arena, a high ROC may signal that an asset is currently undergoing advantageous upward momentum, typically outperforming broader market indices. Conversely, a downturn in ROC, especially if it falls below a moving average, may suggest that an asset is losing steam, potentially serving as a sell signal for investors. Market bubbles and ROC. ROC also serves as an indicator of market bubbles, where rapid acceleration in the value of an asset can suggest an unsustainable trend. If the ROC of a broad market index exceeds 50%, it could trigger concerns about an impending market correction, indicating that investors should exercise caution. In options trading, ROC is crucial in determining the relationship between the rate of change in an option's price relative to the fluctuations in the price of the underlying asset, known as its delta. Other metrics, like gamma, the rate of change of delta, further aid traders in evaluating risk and making informed decisions. How to calculate rate of change? The fundamental formulation for determining ROC is ROC equals frac x1, x2, t1, t2 where x1 and x2 are measurements of the variable being studied at two different times. T1 and T2 are the respective times of those measurements. In finance, a more focused formula to derive the percentage return is ROC equals left, frac, text, current value, text, previous value, 1 right, times 100. This formula translates the numerical change into a percentage, offering a clearer view of performance over a designated timeframe. Price rate of change indicator. Among its applications, the price rate of change, ROC, is commonly utilized to measure price fluctuations over time. This indicator serves as a momentum tool in technical analysis, set against a zero midpoint. A positive ROC indicates that prices are likely rising, while a negative ROC suggests a downward trend. The formula for price ROC is stated as follows. Text, price ROC equals frac, times 100. Where B is the price at the current time. A is the price at a previous time. Alternative terms for rate of change. Depending on the context, ROC might go by different nomenclatures. In physics, it could refer to acceleration or deceleration. In statistics, it is represented by the slope of a line in regression analysis. When referring to demographics, it is termed as growth rate. In finance, it is often considered synonymous with momentum. Solving rate of change problems. When addressing rate of change problems, applying the general formula R equals frac d t can guide you. It represents rate as distance or change divided by time, adaptable to various contexts, be it distance, value, or price. Practical applications of the price rate of change indicator. Traders utilize the price rate of change indicator for recognizing market trends. A positive ROC confirms bullish sentiment, while a negative ROC reveals bearish bias. During price consolidations, ROC remains close to zero. Conclusion. The rate of change, ROC, is an indispensable concept, articulating the speed at which variables shift over time. Essential in both technical analysis and financial contexts, ROC empowers investors and traders alike to identify trends, ascertain market momentum, and navigate potential downturns. Understanding the dynamics of ROC not only helps in grasping market fluctuations but also enables sound decision-making for strategic investments. Whether monitoring stock performance or analyzing broader market trends, ROC offers keen insights into the nature of change in our increasingly dynamic financial world.